Most Web3 games will fail. If you hope to make any money in this space, you must first understand that one fact. In angel investing, most companies that you invest into, most startups, are going to fail. In fact, historically, over the last 50 years, about 8 out of 10 startups have gone BK, bankrupt, and they no longer exist. But that might make you wonder, well, how do any startups get any money then if investors know, well, 8 out of 10 times I invest in one of you guys, I'm gonna lose all my money? Well, here's the deal. The 2 out of 10 that succeed oftentimes make such an incredible return, a 10x, a 100x, that a single winner or 2 winners can make you the return on investment of the total 10 that you put in far, far greater than the losses. You don't need everyone to win. In fact, in investing, you can even have most not win, and you can still overall be a winner. Hi guys, my name is Jake. This is On-Chain Gaming. I've been covering the Web3 gaming space for over 2 years. I have also made over $1 million investing in stocks and cryptocurrency. Remember to hit a big thumbs up and hit subscribe if you want to stay up to date on this budding industry as gaming gets real ownership, and because of that, starts to become a lot more realistic. Recently, I tweeted out that you guys should treat unreleased Web3 gaming crypto like venture capital treats angel investing. Now, it's important to note there's a lot of actual real differences in buying a cryptocurrency and investing in an actual company. For one, as of now, cryptocurrencies, they aren't securities and they don't give you any ownership in anything. They're just a utility for an ecosystem, and you're kind of just playing on the market dynamics of supply and demand and hoping that that's going to impact price, which supply and demand do impact price a lot. So very big difference there, but still the idea that especially for unreleased Web3 gaming cryptos and NFTs, you need to treat it like venture capital treats angel investing. Do crazy due diligence, do so much due diligence, and still expect, after you've learned everything there is to learn about the project, including the team and the tokenomics, read the white paper and looked at all of the game developers and past track records and how much runway they have and all of that, after doing all the due diligence, still expect that 8 out of 10 will fail. But expect that the 2 out of 10 that make it will 100x and make it all worth it. Like really worth it. I can give you guys a couple examples just from my own investment track record here. I'm gonna look at stocks, but just know that crypto works the same way. So I have only been investing in the stock market for about 5 years. I mean, I'm only 27 and I got into it in my early 20s. And the first thing that I did was just try to read all of the books from people with the best returns over the last 100 years and just try to fill my head first and foremost with a lot of wisdom from people that have proven they have good track records. And that's kind of what my first step was, because I wanted to get a good foundational fundamental base. But I invested in a lot of different companies and a lot of them didn't really do much. But one of them, Tesla, 20x in a matter of just a couple years. And that single company, despite most of the stocks that I own not doing much, that single company made me over $1 million by itself. In crypto, I've had very similar things happen. I've had a lot of NFTs that I've bought for games that have gone down. And despite being in a bear market, I've had some that have done very well. In fact, I've been a little bit lucky, and some of my biggest purchases happen to have been the ones that actually did well, which made all of my losses really not important at all. For example, I bought a Mystic Axie, which just so happened the Mystic Axies were the only ones that were not inflationary, which is why I spent a lot of money on it. And I was able to sell the Mystic Axie for $25,000 when I had not paid close to that in order to buy it. I was able to get a really nice profit. That's not even the biggest profit I've gotten from an NFT. So just know, if you're doing the due diligence, you're still going to lose most of them, but you don't need most of them to work out. You just need to keep holding, and you need to let your winners ride in order to over a decade really make out super, super good. So hopefully that changed your thought process a little bit about this. Now, I want to just touch on this a little bit at the end of the video. There's been a bit of controversy on Twitter recently about crypto gaming creators talking about markets instead of just talking about gameplay. And I just have two quick things that I want to say. First of all, if you don't like the market game within crypto gaming, and there's going to be a market game anytime you add real ownership to anything, because then we start to care about the value of things we own. We just start to care about things more when we own them. So there's going to be a market game, and there is going to be a massive audience of people that care about the market game. If you don't, then you can watch videos about Web 2 games if you want an entire 100% complete focus on the gameplay. I am totally going to make a lot of videos focused on gameplay here, but the market side of crypto gaming is a fun game. And honestly, my second point here is that there's really not any actual fun games in Web 3, at least not fully launched ones that are on par with the really fun Web 2 games, which leaves us with a situation where the funnest game in crypto gaming right now is the market game. And that's the honest truth. So if people on Twitter want to start villainizing game creators for talking about tokens and prices in Web3, I mean, feel free to, but I'm not going to listen to you because you're talking out of the side of your head. Go watch Web2 content creators if you only want to focus on gameplay. I am not going to listen to that shiznaz. KagiJan has been defending the idea of talking about prices and stuff. And yeah, I 100% agree with everything that he said. I mean, imagine shaming a Pokemon collector for talking about the future price appreciation of his favorite Charizard. Like, that would be insane. That's part of why he's excited about collecting Pokemon cards. That's the truth of it. And it's the same for Web3 gaming. Or think about a Lego collector. Is a Lego collector going to be shamed for talking about the potential upside of a limited edition Star Wars Lego set that's no longer going to be made going forward, and comparing that to the previous limited edition sets and how much they've appreciated? My younger brother loves collecting Legos, and one of his favorite things to tell me is that Legos have out-appreciated as an asset class the S&P 500. If you guys enjoyed this video, remember to drop a big thumbs up. Let me know your thoughts below. And then also, if you're not subscribed yet, make sure you hit subscribe. And if you would like to continue learning about why I am excited about this space, then make sure you check out this video. It's just like an overview about kind of conceptually from a fundamental level, how does making money playing crypto games work? How can it work? And is it sustainable? Check it out, and I'll see you guys in the next one.